Stock market today analysis for October 18th, 2022. We see the Nasdaq up 0.90%. S&P 500 up 0.14%. U.S. Treasury 10-year yield down 2.1 basis points. Gold down 0.49%. Bitcoin down 1.33%. Oil down 2.70%. We had Netflix report today, Johnson & Johnson, Goldman Sachs, United Airlines, Lockheed Martin. You can see this long list, and we can get a quick glance at how they did. Look at that. I mean, we could debate up, down, but it's like basically sideways. Just looking through here. Now there's down, right? We can, that one's pretty okay. That's up. But lots of sideways motion. Not 100%, but okay, up and then sideways for Lockheed Martin. We got Tesla reporting tomorrow, IBM, Procter & Gamble, and 50 others. If you're interested in reading, finding out what those 50 others are, go to stocktwits.com/earnings-calendar. Then this week we also have Snapchat, Nokia, American Airlines, 72 others, Verizon, American Express, Schlumberger, and 12 more on Friday. The VIX down just a tad bit, down just a little bit to 30.5. Let's throw on S&P 500. Generally, what the rule of thumb is: when the VIX is high, you buy; when the VIX is low, you go. So maybe we're setting up for somewhat of a rally. See how long that rally is going to last, if the VIX is going to pull back. And that will be interesting to see if that's going to happen. The Manarino Market Risk Indicator is showing us basically sideways risk. And we can say, well, it's down a little bit, but this is why me personally, instead of just like, hey, up, down, these numbers, I really enjoy looking at it in a picture format, because this 279.5 and then down to 78.10, is that significant? Well, when you look at this whole time span from August 29th, no, it's not significant. In fact, I wish I would have been graphing this from 2 years ago, or whenever this risk indicator first came out, because when it first came out, it was down here in the low risk. So up, down, whatever amount, over what time frame, and in relationship to what, though that really matters. 10-year U.S. Treasury is down just a little bit, 0.42%. Now here's the 13-week. If you hear about people talking about inversion in the yield curve, and basically in a super layman's terms, what they're talking about is when these shorter term interest rates are higher than these longer term ones. So for example, this 5-year Treasury yield, 5-year Treasury giving 4.215%, whereas a 30-year giving 4.02. Right? You can get paid more to lend for a shorter time frame. And the reason why that's, kind of odd is that usually when you lend somebody for a longer time, it's perceived as a higher risk. And I hear people talking about it a lot, exactly how to take that and take that as some sort of indicator to make a decision on trading. I don't really know. But what I do, in my opinion, what I do think that that it's given us an indication of overall things are unstable. I think it really is another confirmation that we're in a higher risk environment, right? We're in this high risk, 278.1. We're here between 2 and 300. We're closer to 300 than we are to 2, right? So we're in high risk. We're in the higher range of the high risk, and these yield curve inversions, I think, help point to that. And some people might say, hey, point to a recession, da da da, all this stuff. Well, that's great, but how do you take, hey, we're in a recession and make money with it? Even this, well, how do you take this and make money with it? Well, I don't know how you might, but I know what I do, and what I tend to do is I do shorter term trading, and then there's certain assets that I don't mind owning for a long time, so I will buy those via selling cash secured put options or just outright buying them. Pretty much anything that I might want to own for a long term gives a dividend and is optionable. So I start reducing my cost base. I start selling them and cash flowing these, and don't mind holding on to them the rest of my life or cashing out of them. I try to remain neutral. And so what would happen in the stock market? We see the S&P 500. It gapped up today, which we can, it gapped up, but look at it, sold down. Now we're battling this 25-day moving average. And even though it gapped up, look at this, it's made more sellers than buyers in there today, right? When it's green, it's more buyers than sellers. When it's red, it's more sellers than buyers. So even though it's rallying up, that's not really rallying on strength, which, given all this news and stuff that we're talking about, all this stuff, like, it's not surprising, right? It's like it's preaching to the choir at this point. So this is what it looked like. Here was yesterday's. This is 15-minute charts inside of a daily candle, right? So today it gapped up, traded down, kind of went sideways with going up just a little bit, and then gapped down. It kind of went sideways, but kind of coming up. And we see that reflected here, right? Gapped up, went up just a little bit more. So opened here, traded up just a little more, came all the way down here, and basically closing, battling this 25-day moving average. And so right now it closed on the lower end of the 25-day moving average. But if things keep moving up like this, we'll see this lagging indicator, the weekly stochastic. We see it starting to, can get closer, right? Had this real strong downtrend for a while. Well, maybe we're going to get a rally to the upside. Let's see if the other sectors of the S&P 500 give us the same indication. Does over here. What do we see? Okay, more sellers than buyers. Gapped up today, battling that 25-day moving average. Sold off. Light on the volume though, right? So it's gapping up on this light volume. We can see it here. It was yesterday, basically a sideways day. Gaps up today, sells off steeply. Rallies up kind of slightly until it's kind of going sideways, sells off again until it's back into this zone here, kind of rallies up a bit. So basically it's up, but to about, right, not much higher. A lot of, man, but it's still higher. Looking weak though. How about healthcare? Boom, healthcare. Hey, yesterday healthcare already defeated the 25-day moving average. Now healthcare is battling the 50-day moving average, but it's losing that battle at the moment. But yet it is battling it. It at the moment has overtaken the 25-day moving average. So hey, if you're a stock market bull, then good. And look at this. This is a positive sign for the stock market bull. Healthcare turned green. That means there's enough money flowing into the stock by big institutions, family offices, hedge funds, pension funds, endowments, whatever. These people that move, or entities that move huge amounts of money, flowing money into the healthcare sector. but still more selling than buying today. Almost touching that daily average. And we see, looking at the 15-minute chart, same thing. Gapped up, kind of floated down, little sideways. Okay, sells off a little bit, but so gaps up, sells off, goes sideways, sells off, goes sideways, sells off, goes sideways, floats up a little bit, sells off, goes sideways. So it's kind of like, you know, down, basically down day. The financial sector, similar thing, more sellers than buyers. Okay, we are closing above that 25-day moving average and getting ready to do battle with the 50-day moving average. And okay, still red over here, and we got that same look. What is happening inside of this candle? This daily candle, what's happening inside of that to give it this shape? We know by looking at the daily, opened here, you can see that it traded up just a tad bit higher, right? You see that little wick sticking up there, and then you see it traded as low as down here, but selling pressure brought it up. Well, looking inside of a 15-minute chart, you see what happened. So it gaps up, sells off, kind of goes sideways a little bit. See, it peaks up here. I guess in the first, this 15, 30, first 45 minutes is testing that high, and then sells off and does a similar sort of look of all the other equities that we've looked at, as far as just sort of the daily movement of the trading range. Consumer discretionary, still red over here, gapping up, sort of getting closer to that 25-day moving average. More sellers than buyers, and it's some pretty weak volume. And a similar looking candle, right? We got this long wick. You can see over on the 15-minute chart, looking similar over there. XLI industrials got a similar look over on the Pro 2. Okay, here we got more buyers than sellers. That might have been the first sector in the S&P 500 where we've come across more buyers than sellers, closing with a green candle, and closed above that 200-day, that 25-day moving average. And this is a good sign. It's a good sign that we see a long wick here, even though it's kind of a doji looking type of candle, where XLI seems to not only have defeated this 25-day moving average, getting past that, but now it's in here in this trading range versus being below that. So let's see if it will be able to handle that. And this one, let's take a look at this. See, a little bit different. So gapped up, we see kind of sold off here, rallied up, not just a kind of floating rally, but strong rally right here, then kind of did a floating rally over here, sort of going sideways with a sell-off, sideways, and then got end of the day with a bit of a strong rally. A lot of buying volume. Even though I didn't point it out, I noticed a lot of big spike in buying volume on that 5-minute chart for the last 15 minutes of the trading day for most of these equities. Run through them real quick. There it is, S&P 500. Right there, so keep looking right there. Yep, there it is in that one too, same thing. Look at that. And if you've watched a few of these videos, and thank you if you have, all the way through, sometimes you'll hear me talking about how a lot of this stuff looks the same. And that is one reason why having a lot of different stocks really isn't diversified. Because look at, we're looking at 5 different sectors, completely different sectors: technology, healthcare, consumer discretionary, financials, consumer discretionary, industrials, and they look very, very similar. Now, when we look down here at UUP, we'll see something that looks actually different, right? Where it's real diversification. But nonetheless, before that, we'll be looking at IWM. IWM, we got a similar look today, gapped up. We're over this 25-day moving average and more selling. Ooh, look at that. That was a lot. That was a strong day of trading where it's poking above its average volume and it's all red. Sort of looking like a doji, right? We got equal trading to the upside, equal trading to the downside of that body. So it'd be interesting to see what's going to happen tomorrow, because it's not breaking this resistance right here, but it's on the top half of the 25-day moving average. How about the Qs? What do they look like? The Qs are looking like this. We see kind of again this gap up, but it's just like gap into selling, gaps up to that 25-day moving average, and people that feel that that's overpriced, I guess you could say, they're pushing that price down. Yeah, but nonetheless, we see that maybe if things keep going up, we might be getting a rally to the upside. Could be a weak rally to the upside, but it looks like that's maybe what we're going to get. Now, talk about diversification, at least looking at seeing something different, right? When you're diversified, you kind of want to be like, if one asset's going down, then another one might be going up. And that is exactly what's been happening with the dollar. So the dollar is an asset, fiat currency asset, stocks, ETFs, they're assets, paper assets. And you notice that we've been seeing a lot of red on the Pro 2 for all this stuff in the stock market. But look at all this green by holding the dollar. Yeah, it's a little more sophisticated, and a lot of times people are like, hey, if I'm just storing money under my mattress, how am I losing? How am I making money? But it might not so much be about making more money. You might want to compare it in terms of purchasing power, and it is a little more sophisticated than that. But and this isn't necessarily the best thing to be diversifying with. I don't know. I'm not your financial planner. I'm having a hard enough time planning financially for me. So you better seek guidance from someone that that has gone to financial planning school that I heard is a shorter amount of time than it takes for a esthetician to get the haircutting license. But nonetheless, they've got the legal qualifications to tell you everything that you could probably find out on your own. I don't know. You check them out. But anyways, the dollar. What's the dollar doing? Kind of floating down. We see repeatedly it comes down. Here it was below the 50-day moving average and testing this. Below the 25-day moving average and testing this 50-day moving average, and then quite a few times here. It's just testing the 25-day. So let's see if it breaks below the 25-day. If it does, is it going to break below the 50-day moving average? Well, when we're looking at this 200-day moving average, we see this just been in a strong uptrend. That's 3 months. The last 6 months has been in a strong uptrend. Year to date, strong uptrend. 12 months going back, all right, started back here. You notice even over about a year ago, it was already on the above the 200-day moving average, and it's just basically been riding the 200-day and the 25-day and the 50-day, riding it up. Now, sometimes what happens though, as you start getting like this wide gaps between these moving averages, sometimes it like kind of could bring in a correction. But when you have things like the dollar, you've got more going on than when you have something like a stock like let's say H&R Block. Like H&R Block, it's not anything that's like, there's no real politicalness to H&R Block. It's basically, I get it, someone could say, well, what do you mean there's no politicalness? They're into taxes. And it's just a boring type of stock, right? It's like H&R Block, Now the dollar, there's politicalness in there. The dollar, it's basically all kind of politics. So that's why there's these, we look at the interest rates and all those different things. So H&R Block, they have revenues, they have this, they have that. The dollar really doesn't have that. So what's the point of that is the trading UUP, or storing cash under your mattress is your trade or your investment. I don't know. You have to check that out. But this is a good picture though of if you are trading a stock. This is a good picture when we see these bad pictures lately. Well, if you're shorting, this is a good picture to the short. But this is a really good picture of a basically it's a power stock. It's above all of its moving averages, and it's just kept going up. It's in a strong bull market, and if you want a picture of a bull trending stock, there it is. You want a picture of a bear trending stock, there it is. And how about bonds? It's representing 20-year treasury bond, and still just kind of going down. Now, some people will look at the bonds as bonds down, stocks down. So if there is some correlation with that, as long as we keep seeing these stocks go down, these bonds go down, 20-year TLT, if we keep seeing TLT go down, then and not going up, then sooner or later, if there is some sort of correlation with that, then we'll see the stocks come down too. But right now, that's not what we're seeing, are we? But we see the stocks trying to go up. How about oil? Oil came down, and I was happy. I was more happy with it in this higher range, but right now it's down here in this lower range. It's down here in the $83 range, and ideally, so maybe you're aware of it, but I have I sold a put option on oil, and if it stays in this area, I'll be okay. But I'm telling you what, the days to expiration are becoming more and more narrow. And as soon as it gives me the opportunity to close with just a little bit of profit, hey, I'm taking that risk off the table. How about GOLD? GOLD, man, look at that. Just kind of doing sideways shuffle here at the moment. Really kind of some, for a decent amount of selling volume, it really didn't move much. So we're kind of stuck in this range. And as I've said on these videos before, this is the futures. The spot price of precious metals are basically, for whatever reason, I don't have a legitimate reason for you. Can only speculate on these different reasons, but nonetheless, for whatever the reason, the spot price that you can buy the physical metal is supposedly determined by these paper contracts. So this is a derivative of the actual asset, which is a physical thing, and supposedly these paper contracts determine that price. But if you try to buy some gold or silver from, get some physical delivery of it, you might not be paying these prices. So me personally, the way I look at it is the actual price to acquire the metal is when you go out to the market and you're buying it, and whatever that spot price is plus that premium, and then the whole premium things, they can add in another element. But I just look at this as the paper, me personally, the paper price of gold. And if you want to trade that, I really have never tried the futures other than selling options on it, but it was not really exciting. So I learned to sell options on oil futures, and that was a lot easier for what I was trying to do. But maybe some of the mining stocks, maybe the ETFs, you could take a look at that, see if that's something you want to trade that price action of that. Here's silver, and gold or silver, I hope it dives. I hope it tanks. Why? Because I want to buy more. And Bitcoin. Here we go. Bitcoin still just kind of going sideways, right? It's like dropped down a little bit, really struggling on this to get over and stay over this $20,000 range. And you know, maybe these prices are consolidating, but what conclusions can we draw from Bitcoin just sort of petering out here? Well, it's going sideways, and the daily trading range is kind of like, it's kind of shrinking. In this one, it had a good actual range. Looks like it got up to 20,000, almost, you know, almost. I guess it didn't get 20,000, but it got up to that 50-day moving average, which is about like 1975. So maybe there was like almost $700 range right in here, but definitely not in here, not in here. And here I would have some bigger candles, but the volume just seems kind of low. So one thing that this is indicating to me, that there's no one really buying or selling right now, that it's just kind of maybe people are just kind of waiting to gather information. And speaking of gathering information, I watched this video from Kitco on YouTube today, and I had to watch this because we used to see this a lot more. I used to see this a lot more on YouTube. Bitcoin price to hit 100,000, but when it was closer to 70,000, it was like Bitcoin to hit 250,000, Bitcoin to hit 500,000, Bitcoin to hit 1 million, and so I had to watch this, because right now we're obviously pretty far away from 100,000. And some of the base cases that he was making on why it would go to 100,000, like, I didn't see anything ridiculous. Not that but I also didn't see anything that made me want to stop what I was doing and figure out a way for me to start acquiring Bitcoin. It didn't do that either. But the one thing that stood out to me the most is, and if you watch this, it's like at one time when I first learned about Bitcoin, I learned about it as a medium of exchange. And when was it? I don't know if it was 2009, 2008. It was a while ago. It was before it got popular, before CNBC was talking about it. And I was hearing about it specifically for having a way to transact without using the US dollar. And it seems like that narrative has gone to the wayside. And what people focus on is buy low, sell high. You become rich. Where, as I mentioned, when I first heard about it, the whole idea of Bitcoin was to transact without using the US dollar. You know, and earlier in this video, I'm talking about, you know, is storing US dollars under your mattress a great investment? So if it's something, what happened? What happened? If it was originally designed to be this medium of exchange, right? Generally speaking, mediums of exchange, they're not meant to buy low and sell high. It's not meant to be so much treated like a stock in investment. It's meant to be a medium of exchange. Want a bottle of water? Yeah, it costs. I'll trade it to you for whatever, this much. This is what it costs. Give it to me in this much Bitcoin or whatever they are, like Satoshis. However it's broken down. Want to put gas in a car? Whatever. You want to buy my French Bulldog? My puppies? French Bulldog puppies? I'm selling them for this much Satoshis. So it seems like that has gone away. And when I was listening to this interview, some of the base cases he was making for the dollar to Bitcoin exchange ratio to go higher, meaning more dollars, right? The price in US dollars to go higher, that made sense. But when he's talking about this medium of exchange, I think his arguments were super weak. But check it out. See if you like it. See what you think about that. And I got to leave you with something. And that something is S&P 500 line chart prediction for what I think is going to happen. I think through the earnings, we see it going up, right? We see it's put in a little base right here. We got a little W pattern, even though it's not. Oh, that's not the kind of line I want to draw. It's not a W that looks like this one right here. See this one? I hope my cursor is showing up. W, right? And see how the right hand part of that W is really higher than the left hand part? Then look what happened. Now here we have on this one, we have the right hand side of the W being lower than the left hand, which is usually a bearish indicator. And look what happened. Now this is with you know, your good old quantitative easing and stimulation and the plunger team, everybody working hand in hand for a collective project to rally these prices up. So, you know, whatever. Here you got a W and it's even. So we got this W here and you see it's kind of even. So generally that's not it's not as bullish as this. But, you know, hey, maybe we're going to get some plunge protection team goosing. Who knows? Got Janet Yellen talking about the treasury buying bonds. They're selling the bonds, they're buying the bonds. That's what I should do. I should open up a business and sell my products to customers and then buy my products back from the customers. I don't know, but hey, if it's going to rally the stock market, then even though it wouldn't make sense if you owned a bagel shop, but you know, whatever. The government, they get to do things differently, I guess, and if it rallies the stock market, hey, let's enjoy the ride. So so I think we might, through these earnings season, we're going to be getting closer to this top of this range. How close? I don't know, but I think through earnings season we're going to get closer. I want to see it get closer. I want to see it get close enough to test this. Right here it tested it, broke out, but couldn't maintain above. Right here it tested it, couldn't even break out. Right here it tested it, broke out, and couldn't remain above. So let's see what's going to happen. Because if it's going to continue to the downside, it's not going to be able to break out of this channel. And if it does break out of the channel, it won't be able to maintain. It'll end up failing. And then we'll know until they start like announcing, or even if they don't announce it, until we figure out that they're doing some sort of, you know, goosing the stock market to the upside. So if you're confused, if you're not even necessarily confused, what's one level down from confusion? How about uncertain, indecisive, not sure? Paper trade. There's no harm in paper trading. Paper trade will allow you to experience the stock market, learn a particular brokerage platform without risking real money. So you can make silly newbie mistakes without risking real money. And even though people probably won't admit it, but most people probably even make mistakes after they're not a newbie. And it's just, people have a hard time admitting that they make mistakes. But generally, you know, you make a lot of mistakes when you're just starting something. And as I've mentioned in previous recordings somewhere, when it comes to the stock market, you are up against everybody. There's no belt system here. This isn't karate class. This isn't a karate competition. You don't have the black belts sparring or fighting against the black belts. You don't have the blue belts competing against the blue belts. Well, no matter what color belt you are in the stock market, you're competing against the black belts. You just don't know. You don't know if you're competing against a black belt or a yellow belt. So just assume that you're always competing against professionals. So paper trade. Make the silly errors. And another thing you can paper trade and consider doing is selling cash secured put options on a stock you wouldn't mind owning the rest of your life. Why? Why do this? Even though it takes a little more understanding, it's a little more complex to understand it. It's not too much. If you've made it to the end of this video, you have enough drive to do this. It is not beyond your cognitive ability to be able to sell cash secured put options on a stock you wouldn't mind owning the rest of your life. So why do that? Because when you're doing that, for example, let's say you're doing it on the S&P 500. You can look at a chart like this, which look on my website, or excuse me, look on my YouTube channel. You'll see some videos about selling put options in a bear market. I give you a way to start setting up some stock charts. Is it the be all end all? No, but it'll get you going. And so, you could sell a put option. Let's say you're okay with buying S&P 500 at let's say you can make some money buying it, that you'd be okay with buying it at 340, 344, somewhere in there. Maybe you can get paid some money to sell a cash secured put option here, which basically means you got the money to buy 100 shares of the stock at $340, and you get paid to sit there and wait. If it stays above 340, then you just keep the premium. If it goes below 340, you keep the premium and you buy the stock. The S&P 500 doesn't have the best dividend, but it gives you a dividend. So every 3 months, bring in a little bit of money, then you could be selling covered calls against it. All this time, if you're selling covered calls at like 350 and you bought it at 340, you bring in premium. If it stays below 350, you keep the premium and you keep the stock. If it goes above 350, you keep the premium and you sell the stock at 350. You made $10 per share. Not too bad for not knowing what's going on. What I like about it the most is that, let's say you get stuck with this the rest of your life. As long as you're collecting dividends and you keep selling covered call options, eventually you have 100 shares of stock. You have your $340 times 100 shares back, and you still collect the dividends, and you still can keep cash flowing it through selling options. So it's pretty fantastic, and I can help you get the ball rolling with that by going here, download this cash secured put stock selection guide. It's at ihavesuccess.com. Cash secured put stock selection guide. This will give you a framework. Again, it's not the be all end all, but it will give you a structure of like, okay, these are some things I can look for. Then modify it, do a little research. Again, I'm not your financial planner. I'm planning my own finances, and I don't even have a license to be planning my own finances. So hopefully, the state of Hawaii doesn't knock on my door and arrest me for not having my own financial license to be planning my own finances. Who knows? But nonetheless, tweak it to what's going to suit you. This one, 3 stocks I saw cash secured put options on. They're not the only 3 stocks I saw cash secured put options on, but they're 3 stocks for years I've been selling cash secured put options on. Still to this day, I'm selling cash secured put options on them. One of these 3 I actually have a position in right now, and I'm selling covered call options against it. And it's a stock that I just love trading it. You can get this stock option Greeks cheat sheet. Give you a 1-sentence definition of what these different Greeks are. This is not the be all end all on Greeks, but it's something you can have on your computer. You pull it up really quickly. Delta, someone talks about that. You can have it on your phone. You're at a cocktail party. You could be at a cocktail party on your phone. Someone's talking a bunch of gobbledygook. You don't understand it. You pretend like you understand. You pull it up. Oh, now I know what gamma is. 1-sentence definition. Whatever. Use it for whatever you want. Bring it out on your dates. Impress the people you're dating. Hey, did you know that delta and gamma are related? Whatever. Use it for whatever you want. And my favorite, it was the first one, and it's my favorite. It's my baby. 3 tactics to transform your financial results. Number 1 and number 2, they're not financial related, but if you implement them indirectly, they will help your financial results. Number 3 is 100% financial related. It is the hardest to implement. And if you do it, it will absolutely change your life. I just don't know if you have the willpower, the discipline, the drive, and everything needed to do it. Most people will have the excuses not to do it. I hope you're not that type of person. I hope you're a person like me and you have the willpower to do it. You guys have a fantastic day. Go to iofsuccess.com, download that stuff, and message me. Don't tell me any bad news. Don't make fun of me. Like, I don't care. You don't like this video? I don't care. You know, if you're going to message me something you want to connect on. Because other than that, I don't give two about your like negative opinion of me. You guys have a fantastic day. Bye-bye.